get to our closing bell exchange. Here we go on this. By the way, this is a quadruple witching day. We got all kinds of things expiring on the close. We had some on the open this morning today, this being the third Friday of the month of September. David Waddell from Waddell & Associates is with us today. CNBC contributor Peter Costa from Empire Executions is here with us at Post 9. And our pal Jack Barugian from UCX is there at the CME in Chicago. Peter, here we go again. If anything, things with North Korea ramping up again, and yet this market just continues to incrementally move higher, and the VIX sits at 10.
It boggles the mind, Bill. And you know what? I've been trying to figure out why you have. I mean, we had nothing but negative reports this morning and this afternoon. To me, this market is resilient because it's an inflow of capital that knows no reason not to be here, meaning that the ETF money is moving into ETFs. It's a continuous flow of money.
It's on automatic pilot?
It's on automatic pilot.
Okay.
They buy if it goes up, it goes down. News is not, it's not news.
What happens to all that money in ETFs when it does go down?
That's a question that we probably...
We haven't found out yet.
We don't know, because ever since the ETFs have become a focal point of investing, individual investing, there hasn't been a downturn of any significance.
It is interesting, David, to watch the market reaction. Overnight, the Kospi in Korea, the Nikkei in Japan, they were actually the leaders in terms of global markets. Has the global market become immune to geopolitical flare-ups?
You know, the market's been immune to North Korea. Let's not forget they fired like 20 missiles last year. So we're all excited about this, but I'm not sure what's changed is North Korea's position as much as we went from Obama to Trump, and so that makes this more interesting. But I think it's possible that North Korea nukes Seattle, but it's not probable. And the reason the market's going up is because the probables list includes rising inflation expectations this week. I think that's the big and most underreported factor. That led to a rally in small cap financials. The yield curve steepened, the dollar strengthened. I mean, we had a big reflationary week. So North Korea can throw fireworks in the air. They have been doing it for years. I don't think, other than the trading algorithms in the after hours, that it really impacts what goes on Wall Street on a daily basis.
So it's the fundamentals in your view. Jack, what about you? Last week we had very much in evidence the safety trade as gold hit a year's high. The 10-year hit a yield that we hadn't seen all year. This week, though, it's gone the other direction, and the dollar's been searching for a bottom, as David suggested. What do you make of the market's response this week?
Well, Bill, that was a crowded trade, and Peter will tell you because he's one of the traders that was probably in that trade along with me and everybody else. Professionals have been fighting the tape now. You know, these incremental highs are like that slow bleed for a professional trader. The bond market seems to have gotten it right. They're the ones who have actually factored in some of that overnight headline risk that we were just talking about. Stocks don't seem to care, but it's not the first time this has happened. I mean, I'm old enough, and so are you, probably, to think back and look at what happened when we saw that massive troop buildup on the Kuwaiti border, and stocks did not care. Yet there was a big bid in the bond market. So, look, it's happened before. So, you know, this bifurcation that's taken place between the bond market and the stock market is something that we should absolutely pay attention to. And one more thing, the reason stocks have caught a bid not only is because people are taking off these positions that they've been fighting, but because the dollar has been going down for months. Remember, you've had a dollar that's gone down over 10% since the beginning of the year, and the S&P 500 has gone up about that much.
You know, it's interesting in the action this week. So U.S. stocks are actually, the S&P 500 set for their best week since back in April. The Dow heading for its best week of the year.
This year,
The FTSE 100 in the U.K. has actually had a down week, and that's on the strength of the pound. There were warnings that they were going to raise interest rates sooner than later. It feels like this market, investors are more afraid of higher interest rates than North Korea, terrorist attack in London, weak economic data in the form of retail sales today and others?
Well, you know what? I mean, what that does is that puts December as a spotlight. You know, are we going to see rates go up in December? I think after seeing the inflation numbers, you got to think that the Fed might start thinking about it used to be 50-50. I think it might be a little bit more like 60-40 now, where they might be raising rates because they are starting to see that inflationary trade. They are starting to see if they see wage inflation, you're going to be pretty sure that they're going to raise rates in December.
By the way, before we go, anything to expect on this expiration on the close here?
A lot of volume. I mean, we saw a lot of volume on the opening this morning. I see the numbers already. They're substantial. I mean, this is going to be probably one of the bigger trading days of the year, if not the biggest. But as far as like the volatility, you're not going to see much.
We've seen lately, that's for sure.
Yeah, exactly.
All right, David, Peter, Jack, thank you all. Good to see you guys. Appreciate it. Have a good weekend.
Good to be with you.